Investing in the stock market has become one of the most talked about topics today. As someone who has more than 10 years experience working in the finance, investing and accounting space, I've seen many investors, especially beginners, who invest in the stock markets simply because of the trends, influenced by friends or acquaintances, and performing this simply because every other person is doing it and not necessarily because they're performing the technical research required. So this is simply what I call herd mentality, or the fear of missing out, FOMO. In this video, I'll be explaining some reasons why you should never buy stocks if you don't want to lose your money. I strongly believe this is very valuable information for every serious investor, especially beginners. So if this is you, ensure you carefully watch till the end. And that's if you don't want to make the mistakes every other person is making out there. So here are 6 important reasons why I think you should never buy stocks today. Number 1 is if you are not financially prepared for investments. Now, it's no news that the stock market comes with its own unique kind of risk which it poses to every investor. And most importantly, you'll be surprised that the stock market brings higher risk than many other investments out there. So if you currently have a debt with very high interest rates, then don't go there.
Don't try it.
So a very typical example I want to give is if you have a credit card debt with interest of above 10%, I'd recommend you pay your credit card debt first before you start your investment journey. And my reason for saying this is that there's a very low likelihood, almost impossible, that the average returns on your investment in the stock market would exceed 10% on a consistent basis. So this means that there's more predictable returns or increased benefits when you pay down your credit card debt before investing, simply because the interest rates are high. In other words, the amount of savings you make by paying down that debt would far outweigh the returns you will get from your investment if you are to invest that same amount into the stock market. So go ahead and pay down that debt first. So number 2 reason why you should not buy stocks today is if you have an extremely low risk tolerance and appetite. So if you're someone who is extremely risk averse or cannot tolerate any sort of financial loss arising from the stock market, then don't go there. In other words, the stock market is not meant for you. So this is because your investments are exposed to high fluctuations arising from variability in the stock market, which is almost inevitable for any investor. And like the saying goes, the higher the risk, the higher the returns. The other thing you need to also remind yourself is that when you invest in stocks, you're not necessarily investing just the stocks alone, but also in the business. And if you are someone that's run a business before, you know that a business does not always go as planned. Sometimes things may arise, uncertainties may occur that might make the business go south. So you need to incorporate that into your decision making. So my recommendation under this area is in 3 folds. Number 1 question is you need to ask yourself if you'll be okay if the investment market drops significantly or if you lose some of your funds. Now, I have a very personal rule of thumb which I use for my investment, and that's to say, invest what I'm willing to lose. Now, I find some people investing their entire savings, their life savings, and don't have emergency funds. That's a big risk. I would recommend you invest your spare funds or some extra funds that you have saved from maybe reducing your expenditure or whatever the case may be. The second thing you need to ask yourself is, are there more secured and less variable options that I would prefer to the stock market? The third thing is, do I have something urgent to do with those funds rather than waiting for the returns? So once you have answered those questions and your result is in the affirmative, then avoid the stock market. However, the least you can do is to invest in ETF or exchange traded funds or index funds, as the case may be, that helps to diversify your investment so you are not exposed to all the risk associated with an individual stock. Number 4 reason is if you intend to use the funds which you plan to invest in the stock market within the medium to short term. So one of the major advice I give about investment is you should never have a mismatch between your investment return lifespan and your goal timeline. So for example, if you have a plan to travel to, say, a country, maybe the UAE for vacation, or you intend to have an event, say a birthday party, or you plan to even buy a home in the next 1 to 2 years, and then you decide to invest that money which you had earmarked for that purpose to invest in the stock market, then you have automatically created a mismatch. This is simply because you cannot expect to get returns from the stock market in such a short time unless you are day trading, which is a completely different concept. Also, due to the high volatility in the stock market, you risk exposing your funds to a complete loss in that market. And this will ultimately deprive you of carrying out all of those activities which you intend to do. And I'm also talking from the place of personal experience, and I would recommend you avoid it. Number 5 reason why I think you should not buy stocks is if you are looking to get rich quickly. If you're a short-term focused investor who is looking for how to make short-term profit, then say with me, don't go there. And this is because, like I earlier mentioned, you risk being exposed to variability in your returns and, of course, in the original funds which you invested. You could actually lose all of your money in the stock market. It's given. So I know quite a number of people who see the stock market as a means to make quick money or to cash out, like they call it. I've had people ask me questions like, how quickly can I make my returns if I invest at this amount today? How much can I get in the next 1 month or 6 months? And I find them very hilarious. Some people even try to speculate on the best time to invest and when to sell off so they can make quick gains. Now, that's no different from day trading, which I actually do not encourage, especially if your focus is on well-building and long-term financial independence. So if you're someone that is focused on speculation or the best time to get into the stock market, I just want to remind you of this saying that time in the market is always better than timing the market, which simply implies that getting into the market as early as possible will be always better than someone that tries to get in at the right time. So that means that you get the best value from the stock market when you spend quality time in there, or you have a long-term focus rather than a short-term focus. So the next reason why you should not buy stock if you don't want to lose your money is if you have inadequate knowledge of the stock market overall. So in Warren Buffett's words, he says that do not invest in a business you don't have a knowledge of. Now, what that simply implies is that don't invest in a business you don't have an understanding, especially the stock market or any stock you don't have an understanding of how that business operates, their activities, including how they generate their income. So my recommendation would be for you to acquire the necessary knowledge before you go ahead to invest in them. Now, I see quite a number of people that invest simply because they feel that the figures look amazing or look right. Now, even if it's an excellent investment, if you don't have an understanding what the business does to determine if it's going to be sustainable into the long term, I would recommend you stay away from those investments completely. So I want to remind you about something that's very crucial. Whenever you buy or invest in stocks, you're not just buying the stocks, but also investing in the company as a whole. So when you invest in stocks just based on the price trend or the growth or the number of people purchasing it, and the business is not focused or you don't analyze to see how well business is operating, then there's a risk you're going to lose your money. In other words, just focusing on the stock price alone and its fluctuations can be highly deceptive. So my recommendation is to understand whatever business you want to invest in first before you choose whether you want to invest in them. So one thing I'm actually committed to doing for all my subscribers is to ensure that I provide the requisite knowledge you need to thrive in the stock market or to invest effectively in the stock market. So this will include topics around how to pick your stocks, how to analyze the stock market, and how to analyze a company as the case may be. So if you need any of this information, feel free to subscribe to the channel so you can gain this value as the time goes by. So the last reason why I think you should not waste time buying stock is if you don't have an established goal or investment strategy. So if you already have knowledge about how to invest, that's amazing. However, if you don't have a goal or a plan and a strategy on how to invest, then that's a catastrophe waiting to happen. Now, this is because the stock market has a large number of companies with different and varying objectives, goals, plans for their future, which you really need to understand and determine if it aligns with your own goal or objective before investing in them. So if you choose to establish your goals and objectives today, I would recommend you ask yourself these questions. Number 1, what kind of stocks or company would I like to invest in? The 2, what is the reason or purpose for investing in such kind of company? 3, would I adopt a passive or active approach to investment in stocks? The 4th question you need to ask yourself is, would I invest a little chunk into different stocks through index funds, exchange traded funds or ETFs, or would I go all out single stocks or investments? That's when you purchase like an individual stock for a company. The next question you need to ask yourself is, at what point would I sell my stocks? What are the criteria that I'm going to see or achieve or attain to determine if it's right for me to sell my stock? Now, when you ask yourself this particular question, it's going to eliminate the possibility of fear and, of course, emotions when you choose to sell. Now, certain people sell their stocks because every other person is selling their own stocks, or they sell out of panic because the prices have dropped significantly. Now, when you have clear criteria established, that would help you to make that decision based on logic and, of course, objective judgment. So the last question you need to ask yourself is, how would I analyze these stocks for these organizations? So you need to be clear on the parameters you want to consider to determine if you're going to buy or not buy a particular stock. So if you're not sure how to analyze a stock or how to do it on your own, I've tagged the video here that provides a step-by-step guide for a DIY approach to selecting your investments. In other words, you're able to analyze those stocks yourself and determine if it's right for you or not. Now, if you're able to answer all of these questions effectively and clearly, and of course objectively, you will be able to come up with your investment goal and strategy that's going to help you in the long term. So here's the thing, guys. Investment in the stock market is a very valuable venture. However, what you really need is the knowledge to acquire the stocks and, of course, the knowledge about the stock market and how to thrive in the markets. You also need to follow people who are transparent and objective with their investment journey and are willing to share that with you. You also need to start with whatever funds you have and invest on a consistent basis. And lastly, you need to subscribe to this channel so that you continue to get the tips I'll be sharing on your investment journey. Alright, thanks for taking the time to listen to me. I hope you enjoyed every single value I gave in this video, and I look forward to seeing you at the next video. Thank you and see you. Bye.